Yo guys, Self Effects, welcome back to another video. So today we're simply gonna be doing a trade breakdown, right? It's more gonna be based on the models that I've provided on this YouTube channel, right? Based on time and price, quarterly theory, concepts, right? And again, these are just models that I've pretty much created or refined, or just simply created for myself and stuff. But nothing crazy, just a minor model or trade that you look for every single day, right? So we initially on S&P index, right, we initially went short, took a trade lower, right? So in hindsight it's very easy to identify, but even in live markets, because it doesn't really hide from you. But we're just gonna be breaking that down for now. Okay, just to initially remove. Okay, firstly, I utilize my indicator to just outline all my ranges, because I only wanted to focus on the specific zones that I want to be focused on at this current time. For example, I can be using the quarterly theory indicator, which is bugging right now, right? But we don't really need it. I would initially just come here and look at my time and know which model I'm looking for, right? So usually I prefer trading micro models, right? But in this case, this was a Q2 London micro model, right? Meaning that I'm pretty much trading the lower time frame from like the 1 minute going all the way to like the 15-second chart, right? You can modify this and make it work the way you like, right? But in simple terms, to break this model range down, right, this is simply what I look for every single day with London, right? With London Q2, this is based on the micro sessions or the micro cycles, right? So therefore, what do I mean? This whole entire range from this box, do it like this. This is a full 90-minute cycle range. You can say 90 minute. It's a 90-minute cycle, right? And it's called Q1, right? I was trading within pretty much Q2, and all I need is simply, I'm referring back into the last 90-minute cycle range, and this is a very, very specific range. Q1 range, right, would be from midnight to 01:30. And by the way, this applies for every asset class, even Forex, right? This would be my 90-minute range, right? My Q2 90-minute cycle range would be all the way to, right? So this would initially be the range that I'm focused on, right? But the indicator just displays all these things for me. It makes it very easy, right? Let me even just make this background black, because I feel like the grays aren't that visible with this screen. It's on canvas. Okay, so in simple terms, it's a very plain and simple model. Price needs to sweep the accumulation range, Q1 range, the Q1 range, right, which is this right here. So we would say this is our first buy side or buy stop. Let's just say, call it a buy stop raid. That's the first one. That's initially the first one they want to see price sweep or drop off, right? Now the second one would be this range right here, which is initially this range right here, and then we can call this the 90-minute Q1 range. The terminologies do not really matter as long as you understand the concept, right? So we can say this one too had a buy side rate, right? So we can move this to the right like this, buy side rate. And I know if you wanna verify that, price sweeps it just right there, you know. So since price sweeps it, we're anticipating lower prices, right? And our kill zone would be the range of, would be in simply beginning of Q3 heading into Q4. Then our drawn liquidity, best case scenario, would be the Q1 sell side, right? We'll just say Q1 sell side liquidity, right? That's initially our drawn liquidity best case scenario. But usually I just target the first and most obvious one, which was this one. So when price tapped it, I took a partial, right? And then when price began to close above this range high right here, I initially just closed the whole trade because I didn't want to see price pretty much treat this range right here the way to treat a breaker, right? In other words, this was forming a bullish breaker, right? So yeah, that's pretty much how I approach when I'm like doing trade management, right? Especially after we get a very, very, very impulsive move lower like this, right? When we get an impulsive move lower like this, I usually want to see it draw to my target with little to no resistance, right? Impulsively. And any forms of potential retracements back into any forms of PDRAs that are above at least 50% of this range from this high to this low. Anything above the equilibrium, I do not want to see price draw back into that range. The reason I closed it below here was because it could have used Q2, right? Q2 to even draw price deeper, higher into the upside, if that makes sense, right? But initially, our drawn liquidity was always the Q1 low. It ends up drawing back there after all this price fluctuations. Personally, I do not like trading within ranging markets or within ranging conditions like this. I want to be in out, you know. That's simple. For our entry, right, what supports our entry is simply us getting a breaker, which is this order block right here, turning into a breaker block. If I can hide the indicator, it's this order block right here turning into a breaker block when price closes below it. Then it draws back to it, right? What is it drawing back to? This candle right here. We're using this candle as a PDA to support lower prices, just right after price closes above this PDRA right here. And what do we have here? Another block, right? If you don't want to use that, you can identify this right here as an inversion fair value gap. And usually it does not have to touch it, or it can just tap the low, right? That's enough for you to ignite or expect low prices. As soon as price tapped it, I anticipated lower prices. It became, started ranging in simple terms, right? When short right there, then anticipated lower prices. But usually with my ideal entries, right, I would want to, let me do this. Let's add in a bar replay just for us to initially focus. Okay, let's say now we want to take that trade back again, right? And prices tap that range, and for some reason you struggling to trust that price is going to reverse within this range, right? So you'd want to go to a lower time frame, which in this case would be the 50-second charts, and you want to identify the most obvious low, right? If you're not looking for lows, you'd identify a breaker. So this down close candles, this one, that's the most obvious low for me, and price is hovering above it. So if price closes below it, that's when I would go short. Let's see, that was enough. When the next candle opens, this one, I would go short with my stop loss just above the breaker, the 1 minute breaker, and my take profit just within the low like that, right? And then we'd initially anticipate price reaching lower and reaching our target, right? So it's pretty much the same things, the same footprints, the same everything. The only difference is the time aspect, right? All the times are provided within this indicator for just different sessions, but you need to understand the concepts for you to fully understand it. You need to know what Q4 London Micro is. I've taught that. Q3, I've taught that. New York, I've taught that. I've taught everything. You just need to go back and do your tests and fully understand it, right? If you want the indicator, just hit me up on Twitter. I'll be happy to provide you it. But yeah, hopefully you found some insight within this video. This was not that complicated. I'm not gonna be making a 60-hour long video but this was very, very simple and straight to the point, right? This is what you look for every time. For example, now let's do it like this. Then I remove everything, right? So right now we're currently within, let's even hide this, we're currently within Q2, right? Q1, Q2. So Q3 would open at 3 a.m., right? When Q3 opens, what are we looking for? When Q3 begins, okay, let's just scroll lower. We can deactivate this one because it's no longer used to us. Then enable Q3, right? Q3 is initially going to outline the whole entire range. It's simply going to outline the whole entire range of Q2, right? And then price ranges. Now we have our range open. For us to go short, we want to see price sweep the high. For us to go long, we want to see price sweep the low, right? So like now let's just see. Price taps the low, right? Then taps the high. Still indecision. Then I want to see how Q2 closes. Q2 taps the high, then draws lower. This right here could be our potential breaker, but we only take it within Q3. So we want to see how Q3 opens. Okay, now Q3 has opened, right? What do we have above that breaker? It's this right here. We have a fair value gap. Want to see price draw back into that range. Let's see. Price taps it, right? You go to the 15-second chart. You're looking for what? Displacement. Price to close below a bullish candle, which would identify as a breaker, right? Now let's see. Price goes higher, draws lower, then draws lower. If it closes below, then we would initiate a short. Okay, draws higher. It's this order block. Taps it, ranges within this range, opens above, right? This right here would be my new swing low. Price closes below it, we go short. Let's see. Price taps it. If the next candlestick, when the next candlestick opens, that's when we'd go short. Would go shorts, but yeah. Then we can place our stop just above the fair value gap or above the 1 minute breaker high, which this is the breaker candle, right? So you place your stop loss just above right there, right? And what's your drawn liquidity? Your first drawn liquidity would be the accumulation low at base level, right? Then if you want to scale in, you have this right here. This is a fair value gap, right? If price closes below it, you add in another position when price draws back to it. Price taps it. Let's see. Got a potential fair value gap right there. Let's see. Price draws lower. Taps the breaker. Initiates lower prices. If we go to the 15-second charts, what do we have right there? We have a breaker. What do? We go short, but with lower risk, right? With lower risk, go back higher. Then you expect lower prices. Didn't even place the TP. But yeah, you can initially just do that for that, and then you'd have made your profits and whatnot. But in simple terms, this is just me showing you that this is pretty much everywhere. It presents itself everywhere. It's everywhere. It's everywhere, right? It's very easy to identify, and if you're struggling, I can provide you the indicator. Just hit me up for that. But yeah, if you need any insights on it, I'll be pretty much every time I execute trades, I'll try my best to like break them down, right? It's just that some of them are just very simple and yes, very, very straight to the point, right? But yeah, hopefully you found this video, you found it insightful, you found it yeah, just educational. And yeah, if you got any questions, just be sure to hit me up or hit the comment section below. And then yeah, you guys have a good day.